Yeah, hello guys, welcome back to my channel. This is Soji and you are welcome to Soji Forex. I want to appreciate all our new subscribers. Thank you for subscribing to the channel. And in order to be part of what we do proper, every video is an add-on to the previous video. So it is very important that as you join the channel, you make effort to watch previous video so that you can benefit maximally from every other video that will be coming in going forward. So in our last video we talked about how we can filter our entries using a two major type of candlestick pattern, and we talk about using the pin bar, and we tend to identify that the pin bar is a candle that has the wick is 2 times or more the body of the candle regardless of the color, and we establish what the engulfing candle is. And if you are still having a confusion about that, you can drop your question in the comment section, and it's also important that you go back to the previous video and watch the video more than once. After that, we make a video on how we can identify our entries in taking reversal trade, which we say this reversal trade usually happen between the upper band and the lower band. So today we want to look at how we can take a continuation trade. And one of the way to take a continuation trade is by taking advantage of our middle Bollinger Band. So our middle Bollinger Band is one of the major tools that will help us in taking our continuation trade. And this middle line is our middle Bollinger Band, which aid us in taking continuation trade, because we have established that when you see price moving above the middle Bollinger Band, it also serves as a means of identifying trend. So if you are not good in using structural points like the higher high and the lower lows, as the case may be, this can easily help you to identify the directional bias of the market. And when price is below the band, it simply signifies a downtrend. Okay, so we want to look at how to take our continuation trade. And in order to make this easier for us, we'll be adding two more indicators to what we have previously. Okay, the first indicator we are going to add is we'll be adding moving average. Okay, on our chart we have moving average. We have period is 25, shift is 0. Yeah, the method is exponential and the color is red. So click on done. You add another moving average. Okay, we are going to add a new moving average, and this time around we are adding moving average 10. So the method is still exponential, but we're trying to edit. Okay, to 10. Good. Period 10 exponential, then apply to close, then you go back. So here we are. So we have our two moving averages already. Okay, you can change the color to any color of your choice. So we have the moving average 10 and the moving average 25. Both are exponential. So now, in order for us to take our continuation trade, as the case may be, we are looking for two types of candlestick. We are looking for two types of candlestick in order to have our continuation, and we are still looking for the same type of candlestick that we have started with before. We are either looking for an engulfing candlestick or a pin bar formation of a candlesticks. So for instance, looking at this zone, now I am referring to this place. Already the market have reversed and is on its way down from the upper band. Having established that, it is assumed that you have missed this particular reversal and the market is already on its way down. So what you need to do simply is for you to look for a re-entry. And how do we re-enter? You will want to see a pin bar candle closes below the moving average for a sell. You want to see a pin bar closes below these two moving average for you to make your sell. And pop, this is what we have. For instance, this candle you are seeing is a typical example. The candle inside here is a pin bar. So, and we said that what we do is you take your entry at the close of the candle, and then your stop loss is always your, that is where you take your entry, while your stop loss is below. Change the color now. So the candle closes here, you make your entry at that blue line, and then your stop loss is always at the top of the candle. So you have your stop loss up there. Okay, your stop loss is up there, which is here. This is your entry. You just leave about 15 pips above, and then you can see how price plays out beautifully from that zone to the downside. Okay, you see how price play out from this particular candle here, that is the pin bar we're referring to, and then see it all the way to this point, all the way here. Okay, so that is how to go about it. Then number two, you can also get an engulfing candlestick. Okay, an engulfing candlestick, which is also what we have here. All right, This bearish particular candle is an engulfing candlesticks that close below the moving average. Okay, closes below it, you make your entry. You can see that move. That is entry number 2. And also looking at this point, here is another one. This particular candle closes below the moving average. It engulfs this candle, and from there you will make your entry. At the close of the engulfing candle, your stop loss is always above, and you are good to go. So that is how to take a reversal trade. Okay, here we have another one. Can see this, but mind you, you are not taking these trades in isolation. And another thing I want you to take note of is that even if you find a formation of this candle, just as this that we have found here, this particular one now, we can make our entry for a buy. And if you would have taken this trade, it would have taken you all the way to this point. Alright? That is number one thing you need to take note of. Then if you look at this one, this particular one here, it could have been another entry for a sell. But two reasons why this sell did not work. This particular sell, why it did not work, I want to explain. One, anytime you find those candlestick pattern close to a support and resistance, please you don't take the trade. Now looking at this point, you realize that this is a support and resistance zone. Okay, let me limit it. Yeah, that two level here, that is this place and this place, is a support zone. And because these two support zones are established, this particular formation here did not work because it's already close to a support zone. So even when it breaks through this support, remember there is a liquidity that is sitting below these two double bottom. So those liquidity were taken and the market continue in the up direction. So the only valid one we have here is this particular one, which took us to the upside. And also it is important that you go in line with the trend. Note where that price is above the middle Bollinger Band. So we know that there is still more room from the upper band to where price is now. There is more room to it compared to from there to the middle band. Okay, so we move in that direction. So it is very important that when you find anyone close to a level of support or resistance, close to a level of order block, please do not take the trade. Do not. Here is another one. Now you can find this trade, it is 70% accurate. See this hammer? See this engulfing candle? They are everywhere. You can see this. Although at times close to the band is not too ideal. Good. Look at this. This particular one. This pin bar. You make your entry at the close of the pin bar. Stop loss 15 pips below. So you can find this almost everywhere. Look at this particular one. And this one, remember we said we are using our trend line as a continuation. Okay, now you see the price pull back within the zone of this middle Bollinger Band, and then you got a pin bar that closes above this moving average. Here this is your entry, stop loss below, stop loss, entry, and then you see the move to the upside. Remember, you are not taking these trades in isolation. What do I mean? Because price just closed above the moving average does not mean you jump into the trade. Okay, you need to know where are your order blocks, where are your support and resistance. If it is formed close to an order block, you don't take the trade. If it is formed close to a support and resistance, you don't take the trade. If it is formed around improper price action, which is an imbalance, you don't take the trade, because it will only move to those zones and reverses back. Okay, what am I trying to say in essence? You look at this, look at how it played down to that level, right? Now this is what I'm trying to say, but take a look at this. Here we have more like initially this top was formed, this particular top was formed, which is great. And then after that we have this formation that happened, okay, like this particular rejection that gave us a pin bar here. Now because we know there is a resistance here, and then which doubles as an order block, you can see it, there is a resistance there which doubles as an order block. So this particular pin bar forming close to it, we know it is not valid because it is formed close to a resistance, and so there is a tendency of a reversal. And you can see that it did not play out. It only went up to mitigate the order block and then went down. And you can see this particular one, you see how it plays out, right? So these things must be carefully observed. I believe you are getting value from this video. Please do not forget to like, subscribe, and turn on the notification bell so that you'll be the first to get notified. Remember, we say continuation trade. Here is another one. Entry at the close of the candle, stop loss 15 to 20 pips below the candle, and you will see this thing playing out beautifully well, beautifully well in the market. You can see this, look at this pin bar, it went up, you can see how far price went, right? Now look at this one, it came to the downside, but it couldn't work. Why? Because it is almost at this level of the outer Bollinger Band at an exhaustion point. So if I were you, I would treat here as the first bottom, and this is the second bottom with an engulfing candle. that will give me a buy entry. Remember, this first bottom formation serves as our support. Okay, you can go on and on to find this everywhere. You can find countless of it. They are all over. Everywhere you can find them. Literally everywhere. So all you need to do, identify those candles, know when they are formed, and then once it closes above, okay, you can then make your entry. Right, here is another one. Know the trend of the market and then you follow suit. So I don't intend this video to be long. Go to it, backtest it. In the subsequent video, I'll be giving entry and exit rule to this particular strategy. Entry and exit rule. What should be your entry and what should be your condition for exiting the trade? So please do not forget to like, subscribe to our channel, share the video. If you have any question, put it in the comment section and it will be attended to. Thank you and see you in the subsequent video.